Good morning, everybody, and happy Friday. Today is the big jobs report. It just came out about 30 minutes ago. Markets are moving. We're going to get into it, but holy cow, talk about bad numbers from Broadcom last night in the chip sector. This morning, markets were getting crushed. The NASDAQ was down over 200 points. It has now recovered around the flat line. We'll see if it can hold on a Friday going into a weekend, folks. This is getting very tricky for the markets to maintain themselves as more bad news continues to come out. Speaking of the jobs report, let's get right into it here today. I have it up on the board. So what we can see very, very clearly here is that the non-farm payrolls came in at 142,000. That was lower than estimates of 165. However, I said this yesterday, if you watched Trading the Close, I talked about the number. If it's even close, it might be okay for the markets. Everyone, after the JOLTS number was so bad earlier this week, the ADP number was bad just yesterday, everyone was bracing on the edge of their seat, ready for a horrendous non-farm payrolls number, and it came in weaker than expected at 142, but not so weak that everyone's like, holy cow, the economy's flushing down the toilet, right? So that's important. Now, there are some caveats, but wait, there's more. So number one, hourly earnings, this is a positive, at least for now. Hourly earnings were better than expected, 0.4% versus 0.3% expected, all right? So that's how much people are making. So people are making a little bit more money, which is a general positive. Now, when is that not a positive? If it triggers inflation down the road. Right now, that's not a concern for the markets because inflation has come down so much, but it's just something we want to be aware of. It is a positive to keep the economy running because remember, our economy in the U.S. is all about consumer spending. If consumers are making a little bit more money, then maybe they can spend a little bit more, stimulating the economy from falling off that cliff. Now, to the negative stuff, right? So wait, there's even more. The revisions that came in for the past few numbers from non-farm payrolls were atrocious. All right, last month went from I think it was 112,000 to 90-something thousand, a horrendous revision there. The previous months got revised down as well. So while this number at 142 it's weak, but it's not horrible, I wouldn't be surprised if next month we get a revision of this number that drops it to 120 or 110. All right, so again, now you can see very clearly here that the stock market did have a bounce on this number. And again, I think this is the sigh of relief, oh my goodness, thank goodness it's not a negative number or below 100,000. Now we are pulling back a little bit, and today will be very interesting. Can the markets take this mediocre, I would call this mediocre data, not horrible data, not good data, but mediocre data, and can they keep the markets from, again, having a big down day? Right now, if we look at where the S&P closed yesterday, right here, we're basically flat, right? I mean, really give or take right around the flat line on the S&P 500. But again, will it hold, especially considering Broadcom's earnings? Again, Broadcom, by the way, is the third biggest chip stock out there. NVIDIA first, Taiwan Semi second, Broadcom third. $700 billion market cap company. And that stock was getting crushed. Let me flip over to that chart as we speak here so that we can take a look at what it's doing. It has come off of its lows from the pre-market. So this is Broadcom, right? And Broadcom, again, you can see here's earnings after the hours yesterday when it was reported. The stock flushed, went sideways into the 8 p.m. after hours closed. This morning when the markets were absolutely getting annihilated, it was down even more and is kind of slowly ground back up. But it's still down about 7%, 8% on the day. So it's still down pretty big, especially for a market cap the size of Broadcom. Now, one of the things here, a lot of people looking at NVIDIA and saying, wow, why isn't NVIDIA down $4 to $5 if Broadcom, the third biggest player, is down, 8% on the day or so? Why isn't NVIDIA down more? Because actually, NVIDIA is right now positive, right? Here's where NVIDIA closed yesterday. Here's where it's trading. So if we look at this, it closed right around 107, right in here, and you can see it's very clearly positive. The kicker is if you read the financial disclosures and data that Broadcom revealed, their AI business actually did really, really well. It was their fiber optics networking business that is in the trash. It's their other businesses that are really doing poorly. Thus, that is why they lowered their guidance. So for the semis that are strictly AI, this actually was not a horrible report for Broadcom. And I think that's why, even though NVIDIA was quite a bit lower this morning when the whole market was down, it has come back and done pretty well. Now, we'll watch other semiconductors, right? Let's see what SMCI does today. Let's see what Taiwan Semi does, what AMD do today. But ultimately, let's keep an eye on those and see how the whole sector does. But I do think it's important to look into the fine print of these reports. It's not just, oh my goodness, AI is in the trash. AI was actually good for Broadcom. It was their other parts of the business. Okay. So that's just a little more info there to keep an eye on as NVIDIA remains net positive. Now, looking at the U.S. dollar, we can see the dollar initially flushed on those numbers, now rallying back. This is the 10-minute chart of the dollar. I do just want to flip over to the daily chart so that we can gauge where this is. All right, so if we actually go to the weekly, let's go to the weekly. This is what I have on my chart for the weekly chart of the U.S. dollar. So the dollar today, again, a little bit weaker in general. It just means, again, that the Fed is more likely to cut. We're going to look at the Fed watch tool in a second. But this is a longer-term channel. This is a trend line that has now broken. So regardless of what the dollar does today, and let me move that mouse out of the way so we can all see a little bit better, eventually I think the dollar does continue lower into this target level of 95 on the DXY. All right, so again, dollar today, a little bit weaker overall, but for the most part, it's a bigger breakdown on the charts and likely headed lower. Now, if we look at the 10-year yield and we bring up that, let's take a look at where that stands. And if we look at that, right, we see on an intraday basis, the 10-year yield is now down to about 3.7%. What is that telling us? It's telling us that the Fed is still expected to cut rates quite a bit to get us from 5.25 to 5.5 down to 3.7%. And I still think yields are going lower. If we look at the daily chart for a technical read on it, there is a level down here that I've isolated down. Look at these two trend lines, how they're coming into play, right? So if we look at this, we can see that we have a major pivot top on the yields over here. We have a low pivot right through here, right? All through here. And where do those meet? Right over there. Let me get rid of that right there. So right here is where we're likely headed. It's right around 3.15. And I think that could be an end game of this downward loosening cycle of where they're going to take rates. Now, a lot of people out there, they're going to say, oh, but during COVID, we had zero interest rates. Why wouldn't they take us back there? Well, the problem is that if they bring us too low on rates and make money too easy, inflation's going to rip higher again. So they have to kind of dance around this because remember, inflation's not even back to 2%. They're already starting to cut rates, or they're going to be cutting rates in September with inflation just below 3%. So if they cut rates too much and stimulate too much, inflation's not only going to go back to 8 or 9%, but it probably goes back to 15%. Very reminiscent of what happened in the 1970s, where you had this type of situation. Inflation popped up, it came back in, everyone cheered, oh yay, it's coming back in. Then it had a bigger move up, and then it came back in, everyone cheered again, and then it went up one more time before finally coming back down. And again, this has to do with what the Fed was doing and stimulative type stuff. Other factors as well, but quite a bit of that. Okay. So let's go quickly to the Verified Investing website. The reason I'm bringing this up, folks, is because I want to take a look at the Fed Watch tool. So you scroll all the way down, all through this amazing, all-free data on the homepage, the data center, as we call it. And if we go all the way down past the heat maps, we come to this, the Fear and Greed Index, right? So we have the Fear and Greed Index for stocks on one side that's updated daily, crypto on the other side. By the way, crypto's getting pretty darn low here. Interesting to see. We'll look at Bitcoin in just a bit. But this is what I'm focusing on right here, the CME Fed Watch tool on our website. We click on that, and let's take a look what expectations are for the Federal Reserve in terms of cuts. And this is where things get very interesting. So what we're clearly seeing, and this is just updated, so this is going to be the newest data that's just out. What we're seeing here is that as of now, the Fed is expected to cut 50 basis points in the meeting coming up in September. It's September 18th. Here's the date of the next meeting in case you're curious about the next meetings. All the dates are over here. And remember, right now, we are currently at 5.25 to 5.5. So we're over here. If there was another box here, that would be the box. So what this shows us is that as of now, this is where we are. In the September meeting, they're going here, right? And now look at that, 59% chance of a 50 basis point cut. Yesterday, this was at 41% chance. So what this tells us is this data and the revisions are high enough to kick up this to the point where if it's 59 to 60%, the Fed's not going to, as long as that stays there and doesn't go back below 50, the Fed is not going to disappoint the markets. The Fed does not like to shake the markets. It likes to give the markets what it expects. It guides the markets, but very clearly right now, 50 basis point cut. And of course, guys, I'll do the live for that event. I'm back in town. Last meeting I was away, but I'll be doing and trading live on here for that Fed decision on the 18th of September. Now, the next meeting, they're expected to cut again. So at the meeting in November, they're expected to cut again. And then in December, look at this, guys. It skips this right here. It skips and goes here, which tells you their markets are expecting them to do another 50 basis points in December. So all in all, you're looking at 125 basis points of cuts just by year end in this market. Now, this is something I brought up to you guys before, and you guys are informed because I honestly lay it all out on the table for you guys. I don't pull any punches. I tell you how it is. Remember how I was saying when the Beige Book came out about 2 to 3 weeks ago, and then we heard from Jackson Hole from Jerome Powell's speech, I was like, man, all of a sudden they were talking about cutting in July, and then he's so dovish, all of this stuff. And I said, this is telling us something, guys. They're not getting dovish because, they just feel like it. They're getting so dovish about all these cuts because they see data that the markets don't see yet, that us as retail investors don't see. And sure enough, we're starting to see that data come out. All these revisions, my guess is the last few revisions of multiple months ago, they already knew that. They already knew that like weeks ago. And again, that tells us why they've been so dovish, why these Fed officials come out almost daily and say, it's time to start cutting rates multiple times, I mean, heck, we heard from a Fed official just yesterday saying that. Okay. Now, let's get on to some other things here, guys, as we go through. Again, feel free to go through the homepage of the website. It's the data center. It's all free. So many good things. Earnings calendar, economic calendar, heat maps, crypto maps, stocks, fear and greed, buy insider buying and selling. All of that is available. And don't forget, guys, we have the Apprentice Trading Library. A new video of the Apprentice Trading Library is added every single week on Sundays. A new one debuts, and this is all free trading lessons for you guys. So again, selecting the proper chart time frames for success, swing trading versus day trading, understanding the importance of volume. So many things here really are important if you're trying to step your game up. If you like being kind of a retail investor, okay, that's okay too. Some people just want to be the long-term holders. I like to be in control of my assets and my financial future a little bit more, and that's why I like to learn this stuff, and I know a lot of you guys feel the same. All right, if we look back at the NVIDIA chart, you can see it's still holding up relatively well. If we flip back to the SPY here, let's go into this. You can see that for the most part, we're just holding steady now, so nothing really new going on here. We're holding steady right up in this range. We'll watch to see what happens when the stock market opens. Broadcom's a key one to watch today. NVIDIA is going to be key for this market. All of these stocks, very instrumental in what this market does. Okay, I'm going to get right into Bitcoin, folks. We're going to get right into that. Before I do, I just want to make some of you guys aware. We don't really talk about a lot of our services and stuff out there, so I just like to be pointing this out. But if we flip back to the homepage, and if you go to, let's go back to the data center homepage. If you go to over here, Advanced Trader Insights, take a look at this. This is honestly one of my favorite services out there. It's only $20 a month. And what you can see is there's so many reports. These are all the reports. There's a 3 trades of the week from me. There's a trade of the day from my head trader, Ben. There's a rewind where one of the other traders critiques his trade 1 week later. There's also things like the daily market report. I do that every night with insights. Advanced education. Every single day there's a new educational tactic posted, and all for $20. And the reason why, listen, there's obviously more advanced services with much more hand-holding and trade signals with exact entries and exits. But really, I understand that a lot of people don't have a lot of money. We're all starting out. I started out with no money when I started investing. And it's important for us here at Verified Investing to make sure that you guys, if you're really just getting started, that there's something that you can have that educates you, that gives you potential trade setups, all of this stuff for a very low amount. So just check that out. It's just an option, throwing it out there if anyone is interested. Okay, let's get into Bitcoin here. Let's see what Bitcoin's up to today. We know that the data probably, if markets are up, probably did help Bitcoin, and the answer is yes, it did. You can see very clearly Bitcoin caught a little bit of a bid, but there's always a but, right, unfortunately. One of the issues here is that we're still below the pivot line. So it's a good little uptick on Bitcoin on the daily chart, but right here, this is the problem, right, is that we're right into that pivot where we're still below that pivot line. So we got to just monitor that pivot line. We would need a move up here, and then we have to get above to really flip the script, and the bulls could then take control again. Right now, anything below here, the bears are in control until you get here, and then the fight will begin again. The bulls versus the bears will fight it out. You'll have bulls buying at support, bears selling into that, trying to break them down. Who's going to win? It's a battle of epic proportions. We'll have to watch and see. All right, next up, let's take a look at Ethereum. I haven't looked at Ethereum with you guys for a while. Generally, I like to do so. Ethereum still looks kind of in the same boat as Bitcoin in that very key trend line right here. Look at this trend line down. Every time it comes into this range, plus you have this baseline right here, price got below and it's still struggling. Shorter term, if you're looking for really a short-term little bias change, needs to get above this area here, then it can reattack the pivot line there. If it gets above the pivot line, now the bulls take really full control and can force it up significantly. But right now, it's honestly still just like Bitcoin. The bears are still in control. And by the way, it has nothing to do with my personal bias or whatever. Frankly, I try to keep my biases out of it. You know, in fact, you guys know I love Bitcoin. Ethereum, I'm okay on it. I'd say I'm lukewarm, kind of mid-level, indifferent, if you will. But ultimately, the key is it's all about the charts, right? You know, I hate people that try to just sell a narrative like, oh, it's going to do this because I just think so, and like back it up with a thesis, right? Back that, you know what up. All right. In any case, let's get on with it here, guys. On to gold and see what we got. Gold is pulling back today. So gold had a very interesting day today because you had this bullish pattern. But I kept on telling you all week long that you've got a negative divergence and there's too many funds that are long gold right now. And one of the best things that I've started to pay attention to is funds. And when they're overloaded in one direction, it's almost a guarantee it goes the opposite direction. Now you might say, but funds, man, that's like big money. How is big money wrong? Like, what the heck's going on here? The answer is 97% of big money is stupid money. And that's just the nature of it. There's 3% of big money that's smart money. So the key is when one side gets overloaded, you actually can make money. Obviously, you want to use the technicals, but you can use it as an indicator. And again, it's not saying that gold's not eventually going to go higher. I have a huge gold long-term position. But in the shorter term, it just made me very nervous with the negative divergence down here, which I'm not showing on the RSI, but I'm just directing where it would be. That again, we are seeing a little sell-off. Now, listen, gold could just continue in this range and eventually break up, but if it breaks here and here, then you just go down here, and that's where I start to buy as a swing trader, right? That's my level down there. It's a parallel channel. If it breaks down here, you probably flush out a lot of those funds. They kind of get scared, and then we start looking to buy for a move to the upside. Silver today, let's take a look at silver, see what's up with that. Silver initially was up on this news here this morning. It's given up those gains already. It did have two bounce days. Notice the midpoint of the channel, guys. Midpoint of the channel, I usually was just paying attention to my top and bottom lines on the channel, but the midpoint's actually, I mean, I would call it minor support or resistance, but in this case, it worked. Right here, it worked, right? You know, so just doesn't always work here. You can see you punctured through it, although it did get rejected after pushing through, but still, it just gives you a little level to watch and say, okay, this could be an interesting level on the charts. Next up, let's look at oil real quick here and see what we got. And we have oil that continues to kind of flounder here. It is up fractionally today. This is starting to be the beginnings of a potential bear flag. I would prefer, so I covered my short a couple days ago right here at the lows. If I had a perfect scenario, I'd like to see a retrace to the scene of the crime right here and then go short again. Boom, like that. That would be the ideal scenario. If it happens, I'm ready. If it doesn't, who cares? There's always another trade coming around the corner. Always remember that, folks. Okay, next up, lastly, natural gas. And then I just have one more thing to go over per the thing that I had asked you guys to do. We'll go over that in just 1 second. Natural gas is creeping above this trend line here. Again, I've isolated down my potential. And I say potential because you never know as a trader if the technicals, the time factors are going to align, but this would be a potential short level right up here, basically 257 to 263. Again, if we can push up like this, we should get rejected at least back down here, maybe further down. But on natural gas, that would be my first level of resistance. Notice again, it's this midpoint of that M pattern that I've talked to you guys about before that generally, probability-wise, has a good shot of being major resistance and kind of rejecting price. Now, lastly, folks, I know I said to you guys we would give away that prize on the wheel today, a big prize. I didn't have time to go through all of your posts in terms of the trades and the setups, so I'm going to do it this weekend, so we'll do it on Monday. And we'll just make it an every Monday thing. By Friday, I'll compile all of the stuff, or I'll have my staff do it, thank goodness for them. But basically, compile it, and then over the weekend, I'll have time to go through it. Honestly, during the week, I'm working so many hours, even when I get home, jumping on the laptop, going over charts, ready for the next day, that I just don't have a lot of time to go through all the setups that you guys posted, which is, by the way, really cool to see. I love that I'm seeing you guys learning from these, whether you've taken the Winning Trader series, whether you've taken the 1 Minute Scalpel, these great courses, which, by the way, we will be coming out with new courses very soon as well. But either way, thank you guys so much. I'm going to get to my trading floor over here. I got to see what's trading, what we can make money on today via day trading. Apex Live Day Trading Room has, remember, 1 day and 1 week passes. So if you ever do just want to check it out, see if it's for you, jump in there. Plus, we have an AMA with Lawton that goes on from 8:50 to I think about 9:15, 9:20, and he answers all your preliminary questions so that when you do get in there, you're ready to go. You're ready to trade with us because it comes fast. Sometimes these trades for day trades, it's like, okay, we're looking at this level. Oh, it's hitting, guys. Okay, I've just bought. We give our exact levels. My point is you want to come in prepared. That's the way you make the most money. Be prepared. Practice. All right, have a great weekend, folks. I'll be back Monday. Let's see how this market reacts. Take care.